Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On the show tonight, I've got Junbei Liu of 10cap. And we're going to talk about why lithium prices have gone through the roof, whether Boss Energy, after being clobbered by the market, is actually a buy, and what she's buying right now with this market still on the rise. And then Paul Rickard's going to look at the report from JB Hi-Fi. What in the hell's going on with that share price? Unbelievable. Bit of a drop today, but it's done fantastically well. Can it keep up at these elevated levels, or will it come off the boil? And finally, we have a really interesting interview with Ed Carr. He's the winemaker from the House of Arras. He produced the greatest sparkling wine in the world. That's Ed Carr. That's coming up on the show. And we'll talk to him about the wine industry generally and whether it's a good place to invest right now. So without any further ado, let's go to Junbei Liu of 10cap. Thanks for joining us, Junbei Liu.
Thank you for having me, Peter.
I know I've asked this question before, but Boss Energy, a lot of people have liked it. You've liked it in the past. It kind of, why did the share price fall significantly?
Look, I think a company didn't deliver on its promise, and then more recently, actually, company has been promising this is coming. So, and then so the disappointment was a reflection of angry selling. They call it angry selling. Yeah, the angry selling market. It will take some time for the market to gain confidence back in this. In fact, I actually can see my analysts saying, "Do not invest in this ever again." It's just that angry, sort of feeling sentiment towards it. Might take 3 months, might take 6. So I think that's the issue. Now, in terms of, but if you look at the performance of the overall sector, actually has been pretty good, right? So far, obviously wiped out quite a bit, the company specific issue, but the sector so far this year actually has been pretty strong.
Yeah.
There's now easier way to play the uranium exposure. There's this company Silex recently raised a lot of money to fund their technology for uranium enrichment. That gives you pretty good uranium exposure if you overlay it with the uranium, and it doesn't give you those production disappointments. Right now it's raised the money to really test out, its test case, its commercialization for the actual product.
And that's called Silex.
Silex, SLX. It's been listed for a long time. Usually something else.
I do know it, but I've kind of ignored it.
That's right, yeah.
Okay, that's good. So what about the person who is thinking, oh, Boss Energy was here, now down there? Is it a buying opportunity, or you say, I'm not completely convinced?
Look, I think you probably want to wait a bit longer. Often when management disappoint on something they just promised the investors, usually this might be something underneath. So you want to see a bit more, a proper result sheet come through and to see what's there.
Okay, so scratch BOE for a while. Do you think uranium is going to be eventually loved by the market?
Look, I do think so, and I do think market has come to terms with it. They realize there's no alternative energy with so much energy requirement coming through. In fact, this U.S. reporting season, most of the tech companies are talking about investing more in data centers, and where are we going to share the energy? It's incredible. So we just haven't got any reliable form of the solution to that. So I do think uranium is looking great, and particularly how difficult it is to get it out of the ground, to enrich it, and then also how politically sensitive it is. The sector does look pretty good for the foreseeable future.
What about today? Lithium's had a nice rise.
Incredible, yeah.
So what's behind it? I'm happy because I've been praying for PLF. I'm going to come back now. What's behind it?
It's because we have the largest battery producer, and also they've got the 4% of the global lithium mine supply went on hold for at least another couple months. The reason went on hold is because China has suspended its license because of its operations not up to scratch. So and that's 4% of the world's supply. That's massive. This is actually one of many more recently that's been shut down by the government in China. Now, government is going through this phase, this process at the moment. In the last couple months, they call it they're essentially just trying to improve sectors where the competition's been so severe it's actually killing the innovation. No one can make money, so so they're trying to take out the excess capacity. So lithium is one of them. So they went and shut down a lot of mines that's it's not up to scratch, it's not legal and all of that, and this one is one of the biggest ones. So that creates a lot of dislocation dislocation. And this is at the same time where demand is actually picking up. Demand is actually not too bad. And this is usually August, September is the restocking periods, a bit different from iron ore. It's the other way. So your demand is strong and then your supply suddenly got shut down. It creates this huge dislocation. Now that's first. And second, this whole sector is being so heavily shorted by short sellers. If you look at the heavily shorted names, it's just this sector. And then if you look at the short level, hasn't actually come off that much, even though they all had a massive rally in the last month or so. And now with this, this shutdown just means there will be a lot of paying trade. That's right. That's right. So you will see these short seller has to bring those levels down.
Yeah. It's called the squeeze, isn't it?
That's right. That's right. There might be more in micro.
Couldn't happen to a nicer group of people. All right. All right. So that's lithium. What are your preferred companies in the lithium space?
Look, PLS is always my favorite because I just think it's very clean. It's very leveraged. It's got heaps of cash on the balance sheet. Yeah, which is really good. Even though at the current price, lithium price is bouncing a little bit, it's still sort of breaking even still losing a bit of money, but it will get them through for the time being because they got so much cash. In fact, they even talked about potentially, capital return in the future if you see stabilization in the lithium prices. So that will be my best exposure.
Okay. Did you, and I'm sure you did, pick up on what the resources minister told the participants at the Diggers and Dealers Conference in Kalgoorlie, that they were talking about possibly a taxpayer guaranteed price for rare earths and critical minerals?
I know it's
Did it make you think, yeah, it's going to be good for Linus, it's going to be good for
Lupa. Yeah, that's right. Absolutely. Look, it's already happening in the US, right? So, and then we know they're critical mineral, and then we know the price is very, very low to make it even feasible for these guys. So, government would do something, and I do think it's probably a matter of when.
Mm. So is it too late for people, or do you think there's still upside for these companies?
Look, I think there's still upside. This is a very politically sensitive space for anyone that has those sort of mind outside China is going to be worth a lot of value. It took us this long to get here. Now we're seeing it happening. Quite a lot of contracts being awarded in the US now with high prices. In Australia, I think Aluko is actually much more leveraged to the high prices because their mine hasn't even come online yet, and they don't have a contract, whereas Linus actually all contracted out most of their, so they're not as
How's
leveraged.
the relationship with the Malaysian government nowadays?
I think it's better, but they have moved a lot of their production back in Australia. Yeah, that's right.
Yeah. Right. I've got other wider questions, but what have you added to your portfolio recently?
Look, if anything, I think I'm adding more of the consumer discretionary names. Recently I think we spoke about added more Harvey Norman, and today with JB Hi-Fi, great result and share price down, just a great opportunity to buy the dip.
Really?
Yeah, absolutely. Absolutely.
But then you think JB Hi-Fi is ridiculously high.
I don't think so. So it's on 22 times, right? Sounds expensive, but one is the earnings
It's
upgrade.
expensive, but it's a great company. I will consider.
The earnings upgrade is coming through tonight. And also another thing is they are paying out all the special dividend. And usually in the earnings upgrade cycle, consensus analysts always underestimate the operating leverage, especially retailers, because they're all fixed costs, right? And when your revenue goes up and suddenly your earnings so much higher than people expect. So we always see that catch up in upgrade.
Okay, now you got a memory. There was a time where, not very long ago, JB Hi-Fi's share price oscillated between about $25, which was a great time to buy it, and you sold it around 50 something, didn't you? That's 60. But come on, we'll go back a couple of years.
Oh, maybe a few years,
Yeah.
but it depends on what you put into. If you put into something,
All right,
yeah.
but this current price, what is it, 112?
It's 100. Yeah, that's right. Well, it's 100.
100, it just come back.
Yeah, it's come back.
So, and I get it, because if interest rates are coming down, you expect retailers to do well, but these guys did well when interest rates were going up. Was it purely because they are the best business in retail in an area where people are addicted? Technology is addicted. The young guy who's our producer here, young guys,
Keep spending.
tech
That's right.
addicted, you know.
Yeah, absolutely. So look at consumer electronics is one of the hottest area. There's always new stuff coming.
Yeah.
So we've got a new game console, and now today on the call they talk about the PC AI enabled PC and the other products coming through. There's always that level of excitement to drive it. Even during really tough consumer environment, there's still a lot of people buying electronics. So, but remember when the market buying the sector or buying people like JB Hi-Fi, it's always a relative call to something else. Wesfarmers is trading on incredible, very, very expensive, great company, but very expensive multiple relative.
That's Bunnings, isn't it?
That's Bunnings.
That's the addictive business.
That's another one. So, investors look at it going, oh, well, actually, JB Hi-Fi give me a bit higher growth and everything, a bit cheaper. And then, so it's a relative game, so people always choosing the next cheapest alternative.
Yeah.
Then you look at the Harvey Norman, actually doesn't look too bad.
Yeah.
And then you look at the Nick Scali, actually quite expensive. But then there's other ones that look into maybe Adair. I think so far the reporting season, everyone's well, what we're seeing is that housing related retailer or that kind of environment is very strong.
What's the biggest miner in your portfolio?
Oh, that will be the BHP. Yeah, but I have the diversified, so I have real BHP. Fortescue just give me a bit more leverage, simply because
You buy that for that.
for the leverage. Yeah.
Sure. And what about S32? You got any S32?
I don't, but I think that's the cheaper ones
It's
that
diversified, isn't it?
That's right. That's the worst. It's cheaper one. So I tend to stay a little bit bigger, but when all the miners start rallying, that's when you go down.
Yeah.
You go too small. You go to the Iluka. I think Iluka looks very, very, very interesting. South 32, because I think alumina is actually doing pretty well. Copper is another name you got to hold. Even though the price has gone.
Okay, we give them enough ideas to get them happy. One final question. When are you going to get defensive? It's not going to be this year, but in 2026, are you still going to believe that lower interest rates and artificial intelligence is going to keep pushing Wall Street higher and higher? We know one day it won't. And some people are arguing artificial intelligence could be overdone. And they'll invest heavily, but they might get the returns immediately. I also say, well, if artificial intelligence really does the job, unemployment will start rising. And if unemployment rises in the US significantly, we know the consumer is very important there. I'm trying to think of what's going to be the trigger for the market not to go up.
I actually think the market will continuing on until one day it's the valuation that triggers it, right? It suddenly become big expensive, especially the tech space. You have that
like JB Hi-Fi at 22.
That's very different. If you look at the tech, it's incredibly expensive, so that can snap back. Right now you look at the US market, the tech can keep going. So that can create a bit of sell-off, but I don't think structurally that's the problem, right? So usually, in short, when we don't have recession and then central banks are cutting rates, that's very bullish for share market.
Yeah.
So so it should go up. But when it does snap back, that's when you buy the dip. You have to buy the dip.
You've got to promise us that when you get scared, you got to tell us, all right?
Yeah, absolutely.
I'll get scared before you, but you tell us when you're scared.
When I get scared, that's when I go out and buy them, and then I'll probably get scared before I tell them about it.
Okay, Jim Bailey, thanks for joining us.
Thank you for having me.
That's Jim Bailey of 10Cap. And now it's time for Paul Rickard, and I want to look at JB Hi-Fi. Paul, thanks for joining us.
Thanks, Peter.
Let's talk about JB Hi-Fi. You and I have been a little bit perplexed how high that share price has gone to. Today it was sold off on a pretty good report.
Look, I've got very much a workmanlike report in the sense it's pretty well bang on what the market expected. What is interesting about JB Hi-Fi, I think people forget, it's actually earning less money today than it was 5 years ago. Its net profit is
In
actually
dollar
low.
terms, huh?
In dollar terms. Now, that was partly a function of COVID and coming out of COVID, but it had there were a couple of lean years after that. Yet the share price is probably 3 times what it was 5 years ago. So
And what are the price earnings like, Paul?
the price earnings is about 25 to 1. Now, that doesn't sound that high, but it's high for a discretionary retailer, right?
I never had.
Don't have to go to JB Hi-Fi, right?
Yeah.
And
But you can't get those groovy, weird-looking kids who serve you there who are fantastic at customer service.
yeah, there are a lot of discretionary retailers in the low tens, right?
Yeah.
So typically that sector's more like about 15 or 16, right? So it's way off the scale of the sector. It's over the market. Fabulously running well company, but they're not as, what's fabulously well run is JB Hi-Fi Australia. What's not is the Good Guys acquisition looks like a dud. I haven't talked that before, but its profits come down from $250 million 5 years ago to $150 million this year. So just be very honest.
That's like normal retail, isn't it?
That's
Jamie Hoffman's
that's tough. That's furniture and they're especially making
really interest rate affected business.
New Zealand's just breaking even after all this time, so they've really struggled in New Zealand. It's a bit of promise, and they've got another thing. So, look, a fabulous business. I like the company, but it's not what it's cracked up to be by the market. I think the market's off about 8% today.
Yeah.
Basically got what I wanted. It's just taken the price up and up, and it delivers. And so, well, hang on, it's going to be hard work.
Anyone watching this wants you to tell them at what price do you pounce like a tiger back on the JB Hi-Fi? Now or wait?
No, I think I'd be patient. I mean, I don't think the market's going to get super bearish on it because it's such a good company.
Yeah.
It is unquestionably Australia's best retailer, right?
Yeah.
But it has run up a long way ahead of it. There are a lot of very expensive stocks, and eventually the market's going to get a bit tired of some of these expensive stocks. I mean, JB Hi-Fi is growing at about 5%, 6% per annum. It's pretty hard to justify that sort of multiple. And, maybe it's tough. I mean, discretionary retailing, where you get, most of your goods are being imported. So you're subject to the vagaries of import pricing, currency, things happening in China. Who knows, what the cost is going to be. Maybe the
tariff implications.
Maybe they're all going to get dumped here in Australia and they'll be cheap. Your wages go up every year at 3 or 4%. You've got to keep on getting better at what you're doing. And it's just reaches that sort of, it's hard. So look, and to their credit, been internal succession. Terry Smart, who's retiring, he took over from the previous CEO. They've announced his retirement today. Nick Wells, is the chief operating officer, he's going to take over.
Chief operating officers often becomes Smart was that, wasn't it?
Yep. So a good line. It does nicely. It's no debt.
So what's the dividend then?
So base is a share price of about $108. It's about 2.8%. Now, they're going to pay a special dividend of 100 cents per share. They paid a special last year of 80 cents. So that's going to take it to about 3.5. It's okay. It's
American press classified.
Yeah. Yeah. But look, I remember when JB Hi-Fi was yielding in the 6s.
Yeah, I know.
That's why we really liked it. So
as I said, I said to Jim Bailey before you, I just said, well, look, we bought at 25, we sold out in the 50s. She can remember that. How young is June Bailey? But that wasn't long ago, Paul. You and I were doing it.
Yeah, we haven't sold them all out, but just $108. So look, it's great business, but it is tough being a discretionary retailer. And I think at this sort of price, I just think over time the market will ease back on these stocks. It's a bit starved for choice. I think that's a function of it doesn't want to own the banks. The resources, not sure about because of commodity prices. Maybe they've found a bottom question mark. And stocks like JB Hi-Fi, which is the best in category, have become very expensive. And the markets in the last 6 months paid a price for selling the expensive stocks. It's been slapped down. So they haven't really seen a big shift into some of the cheap stocks.
Okay, well, let's go into a stock that hasn't been, or the stocks that haven't been as popular as the big ones in the top 20, namely miners, and today lithium's had a nice rise. Is this kind of like a weird because iron ore started to get a bit of a rise for the last few weeks. Now they're rolling into lithium. Is it Madeline King Resources who told the diggers and dealers, well, we might just guarantee a price for critical minerals and rare earths. Is that helping, you think?
Yes, that's part of it. I mean, this is more a China story because these things are all controlled out of China. And I don't know why this mine in China is being closed and
bad behaving.
I don't really understand. I don't pretend to understand the Chinese market.
But I guess the bottom line is the ones that remain will benefit from the higher lithium price.
Yeah, look, I think that's why we always said if you're going to invest in lithium, look for the best quality producers like Pilbara Minerals.
Yeah.
That's the one. Yeah. Maybe Liontown as well.
Yeah. It seems like IGO as well, Paul, don't they?
Yeah, they seem like they like IGO. I mean, I think just in the sort of there was never a way of explaining why lithium got as expensive as it did, and there's never been a way of explaining why lithium's been sold off out from top to bottom, and the lithium price was almost 90%. Massive short interest in some of the Australian miners. Now we're getting the Chinese government doing things, and the price is going up on almost nothing. So
love Beijing.
I love Beijing. So look, I have a bit of lithium in the portfolio. I'm not getting out, but I don't pretend to understand it. And I think it's one of those things that you just treat that way.
Okay. Any other new stock on your horizon?
I read a really interesting piece in the Switzer Report today about REA, great company, huge monopoly, effectively, they would like to calling that. REA, of course, is the people that run realestate.com. But facing some challenges, I think, from one is the ACCC, two is there's a company that's bought Domain that looks like it's a US company that's actually going to try to stir up Domain.
Squash the giant.
And then thirdly, I just posed a question about AI and REA and its whole business model potentially vulnerable. And I think we're going to see more of this, Peter. I did come to a conclusion, but I think we're going to see more of, what are very strong companies, people saying, well, hang on, they've got great margins. And as soon as there's a great margin involved, focus comes onto them and they're going to say, well, could AI disrupt their whole business model or parts of their business model to make the margin a lot less attractive? So that's one of the cautions I think you have with looking at so-called expensive stocks at the moment. And I think there's going to be more of that in the next, 12 to 18 months as people start to look out and look at this technology and the way it may revolutionize some of the current very successful business models.
Well, we don't give advice here, as you well know, Paul. But do you think it's a good piece of education to say maybe it's time to think about taking some profit if you've done really well with REA, like I have?
Yeah, I think so. I think it's done well. I mean, I just see there's the REA starts the year. It's increased its prices by another 7%. So it's all great. While you make milk while the sun shines, right?
Milk?
Make hay while it's licks. I love.
I guess it's how you do make milk.
Well, you do.
Cows eat the hay.
Farmer, right? Yeah.
That's right. Farmer.
But yeah. So I mean, look, I would take a few profits. I wouldn't go short the stock because it's
a good company.
It's a great company with the number one market position, and that's always a really good starting point. But I can see challenges, and whether maybe not the next 12 months or 2 years, but whether in 3 years' time, it's quite the sort of the cash cow it is today. I think is another question.
Okay, let's Paul Rickard of the Switzer Report. If you want to know more about that fantastic article, which he's been actually boasting about all day in the office, I got to say, you're going to have to be a subscriber to the Switzer Report. Go to switzerreport.com.au. Thanks, Paul.
Thanks, Peter.
And that's Paul Rickard of the Switzer Report. And now we go to Ed Carr, who is the maker of a sparkling wine that topped the world. Yep, he beat the French. You're not as famous as you should be, but we're going to change that, right? We're going to change that. The whole wine industry knows you, but Australians don't know you, but Australians love champions. And you're a champion maker of sparkling wine. And we know that because you won the 2024 championship when it comes to sparkling wine, and you beat the French. Was it a bittersweet victory when it happened?
It's funny enough, I don't really see it as a victory. I see it as a sort of coming of age, I suppose. I just really would like wines to be judged on quality and style rather than country of origin. So, it's always been our aim to make world-class sparkling wine. So if we just can get in a group of those peers from all the countries around the world, including Champagne, obviously, because of its prominence and its history, we're very proud to be there. And then to be selected at the top was something extra special.
Was there a whole lot of sacre bleu type comments around from the French?
Surprisingly not. And when I say surprisingly, I sort of shouldn't have really said that. I think all the growers and winemakers I meet from all around the world are all realizing that they have their own niche that they can carve in the global market. And Champagne certainly has a very big niche, but they themselves too realize that the global sparkling wine market's bigger than champagne, and hence they're in California, Australia, New Zealand, and England to have their share of part of that market.
And is sparkling wine on a upward trend, and maybe taking a bit of market share from red wine?
I think red wine's struggling at the moment. We have seen a decline in demand for red globally. Sparkling wine, fortunately, is in on the increase of consumer preference, but really it's still the same issues we're seeing across all wine styles, that people are drinking less of the more commercially priced product and drinking more of the more premium product. But overall, I guess drinking less is what I'm saying.
Yeah. But we know that the younger generation, they're threatening us baby boomers by not drinking our favorite alcohols, and they drink different sorts of things than we do, and they probably drink less because of their commitment to wellness. We got to try and change that somehow, Ed. But what is the wine industry doing to respond? Like in your case, I guess in a sense, you're favoured because lots of people love champagne, and you're becoming a real alternative and a high-end alternative. So you're in a nice House of Arras is in a nice sweet spot considering your description. But what is the wine industry generally trying to do to make the product more appealing to a wider and younger audience?
I guess looking at different styles, I think we can see this in China as well, that the focus has come off some of the more full-bodied red styles. And to be honest, we're still trying to work out what the market is, but there's a greater preference for lighter reds, white wines, and sparkling wines. So from a sparkling winemaker's point of view, changes like that in the market are still very, very positive for us.
Yeah. Yeah.
It's still pretty tough out there, though. I mean, people's expendable dollar, is still hung on to pretty tightly. So I think we really have to earn our sales. I think there's a global oversupply of red wine, which is going to cause some very tough issues moving forward. And I think that's something that Australia and other producers are going to have to deal with.
Mm. Yeah, I have bumped into you and heard you speak on a number of occasions, so I don't think you're the kind of person who would ever make a wine on the basis that you'd be able to charge a lot for it if it's well regarded. But that's the consequence of House of Aras's achievements, is that your champagne or your sparkling wine, sorry, is at a premium price, which reflects its quality. But what was your main drivers to try and achieve something like you have?
It was purely quality, really. We started in 1995, so it's our 30th anniversary this year of harvest with wines under the Aris label. But we really wanted to produce a world quality sparkling wine that distinctly represented our own house style and the terroir of Tasmania. So from very simple beginnings of one single blend, that's evolved over time into a brand with multiple labels. And once we discovered the quality of making sparkling wine out of Tasmania, we then discovered progressively how well those wines would age. And I think, we've got the right varieties in a very good climate. Potentially the early missing link was maturing the wines long enough to bring them up to world class standard.
Yep.
And I think if you look at our wines on the global market now, our vintage wines and our non-vintage wines as well, are match or are in excess of the age of the wines that other countries are producing as well. So that to me has been the true missing link with Australian sparkling for quite a long time.
Yeah. excuse me for being an economist, but that was my upbringing.
Yes.
Does a low dollar actually help the Australian wine industry at the moment?
Yeah, I think it is so complicated at the moment with the sort of ducking and weaving on tariffs going into each country. Certainly, the lower Australian dollar did offset some of the cost of going into, say, the US. Um, but we're still coming to grips with what tomorrow brings with any potential changes in tariffs and what impact that'll have on the global market. But currently, while we're relatively low in the tariff spectrum, that may be a strategic advantage in terms of cost for us.
Yeah. So are you anticipating a 15%, sorry, a 10% tariff on your exports to the US?
As a winemaker, I'm not anticipating anything because I really don't know. I leave anything to do with finance to the people that are good at numbers. But just reading the media, that would seem fair. Yeah.
Yeah. Okay. And what's it been like to introduce your wine to the Americans? I know when I interviewed the founder of Yellowtail, which had a spectacular success in America. And I remember him saying to me, well, the two things concluded was Americans are intimidated by the French and what's on their bottles. And secondly, they love sugary things. So we put more sugar in our wine. And of course, the price point was very low as well, but they did fantastically well for a long time, Yellowtail. What did you do, or did you ever think about what you need to do to become liked in America?
We did think about things, but ultimately we have stayed true to our style. We haven't tried to make anything different to what we do for any other market. So, I was in the US and Mexico City as well about a month ago, and we had a fantastic response to the wine style. Um, they love the complexity. They like the depth of the wine and the vibrancy. They actually really loved the dryness of the wines. We actually are quite low in dosage compared to a lot of other producers, and there was not one negative comment about this wine needs more sugar. They just loved the balance of them as they were.
Yeah. I do believe that in New York and in California, they're quite happy to have high-end, more expensive wines. It might be in the Donald Trump voting states where they might like a bit of sugar in their wine. Um, looking at the future for the House of Aris, what are you seeing? Are you doing anything new, or do you want to just keep producing the quality that gave you the big tick internationally?
Certainly, we've got the support from William Dong and everybody on the sort of executive level that we don't want to change anything really in terms of quality. There's no compromise to be asked. We do have to work on our markets. We realize that for this brand to be truly successful, it has to become more global.
Yeah.
And yeah, it's sounds a little dull, but it's doing much of what we do again. Because we've evolved, I mean, over 30 years to become what we consider to be, a very strong style. And a lot of wine critics around the world think the same, obviously. Um, but we're always learning, we always can tweak our winemaking, but it's much the same. And we just want to expand our market to those that really like this style. And we've got the three distinct tiers of wine at those different price points. And so we can see the different labels being more consumed by individual markets from our our non-vintage level right the way through to our prestige level. There's a lot of opportunity, but in very different markets.
I'm just thinking, your life spent making wines, obviously trying to take the creations to the highest level. And there must have been, as you say, it's 30 years. There must have been some years when your achievements might have disappointed you because you got high standards. But I always figure with people like you, even when the stuff isn't as good as you like, it's still nice to drink, even when it's not as good as you want it to be. So you can drown your sorrows in a largely unhappy performance.
Um, that's an interesting way of putting it. I mean, having the
Yeah, put
three,
I've got cruder than that, but I've tried to be nice about it.
yeah, I mean, having the three distinct tiers allows us to manage quality. We have a very strict quality policy that if it's not good enough, it doesn't get made, or it doesn't make it to the appropriate level. So that's where we maintain that quality, and I think having that, we tend to vary more in volume, because when things don't make that quality level, then they either move down the bands or they move out of the system entirely. So we take that pretty much on the chin, but we need to maintain those quality levels and make whatever volume that we can that each year allows us.
Okay. One last question, Ed. In reading your background, there was one very disappointing aspect of your history.
Oh, yeah.
That is that you confessed that you came here as an English immigrant. So you're not 100% Aussie, but I'm hoping that everything you learned about wines came from this wonderful country called Australia.
It certainly did. I mean, I was an 8-year-old when I got here, so I didn't have much experience with wine at that time. But yeah, from the sort of science background and microbiology, that's what got me into wine making, and always find sparkling wine very fascinating.
Yeah.
And for some reason, it's proven, that I'm fairly good at it. Yeah.
And I guess you're up with this. But I was quite surprised when I was in London a year or so ago, and I think we're in the Mandarin Oriental in Knightsbridge, and what's that famous chef there, Hester? Yeah, whatever his name is,
Yeah,
Hester.
yeah, Kristen. Yeah,
And that actually was serving English champagne, which we
yeah,
sparkling wine, and it was pretty good. It quite surprised me.
yeah. I mean, climate change has had some effects on the quality. I mean, anybody's got a role with this too, and that's why we're seeing such a growth in English sparkling wine. That a lot of the more southern counties are getting weather that's suitable to make sparkling.
Yeah.
Extremely variable though. It's the classic English summer and autumn. Yeah.
Yeah. Well, you might. I doubt whether you've come across this before, but we did a tour of London with an English academic who wrote a book about the 5 most influential drinks that determined the history of London. And the first one was coffee. It was brought from the Middle East in the 1600s before tea had come to England. But he took us on this tour and he showed us a patch of dirt around near the finance district, which was quite dear to me. And he said, and during this time of the 1600s, there was climate change and they were growing grapes in London and they were making wine in London.
Yeah, I mean, there's some amazing stories, isn't there, when you look back on how things have happened and changed. But I think, yeah, English sparkling wine, there's a lot of very strong producers there now, and yeah, I just think they've moved from a pioneering, wouldn't it be nice to make sparkling wine sort of approach into a very serious business sense. Yeah.
Well, we know they're not as good as the House of Arras, mate, but it's good to see that they're trying.
I think, yeah, I'm not going to, knock back on any compliments for Aris because we're very much part of that market as well. So But again, I do make that point that there's very good sparkling wines made from around the world, and I think the consumer's got a great opportunity to try all of these different wines and see which labels and countries that they actually like,
Okay.
that they prefer.
I won't ask you whether we should invest in treasury wine estates because it's probably too close to the bone to ask a question like that. But thanks very much for joining us on the show.
No, absolutely fine. Thank you.
And that was Ed Carr of the House of Aris. Thanks for joining us on the show. Don't forget, if you want more insights on what to invest in, become a subscriber to the Switzer Report, switzerreport.com.au. Thanks for joining us. See you next week.